Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 4th of August, 2023, and we had some profit taking this week. You can see these semiconductors were up a little bit today, but down close to 4% for the week and month to date. Oil and energy stocks were slightly higher, but energy stocks were still down on the year. They had turned positive for a couple days there, but let's just take a look at the charts and make some sense of it. Here's the daily chart of the S&P 500 on the left. On the right, we have the 30-minute time frame. Let's focus on that 30-minute time frame for now. And what we see here, of course, is that orange line is the 5-day moving average. As I pointed out at length on Wednesday, and I've been saying for decades now, if the 5-day moving average is declining, I have no interest in buying the S&P 500, the NASDAQ, or whatever it is that's below the declining 5-day moving average. Shares of Apple, I'm not interested in buying below a declining 5-day moving average. So that simple rule has saved me more money than anything in my career. And that is just, that powerful of a tool. That and the anchored volume weighted average price. If you read my book, you know that I said on page 91, I always keep a week to date anchored volume weighted average price on my chart. And for the SPY, that's exactly where today's high was before we continued lower. And again, when we see a declining 5-day moving average, you can't trust rallies. It seemed like a good rally this morning, but it just all evaporated right there. So the S&P on the daily time frame, we're closing the week out below the 20-day moving average. We haven't done that in a while. The 50-day moving average is still rising, and we're at the anchor from this low. I still I would like actually for this market to maybe do something like this and come down towards the 50-day moving average in the coming weeks. I'm not bearish the longer term time frame, but I do look at the longer term time frame and say, on that weekly time frame we're still bullish, but on the daily time frame we're in pullback mode. So I don't want to buy this while it's in pullback mode. I'm going to wait to see if that bullishness is confirmed. Don't buy the dip, buy strength after the dip. Once we're back above a flat to rising 5-day moving average is how I look at it for the safety of a swing trade entry. And then the NASDAQ, we also came perfectly to that anchored volume weighted average price for the week to date and below the declining 5-day moving average. These rallies shouldn't surprise you when they fail. The 20-day moving average is just above still. And again, we haven't closed below that since back here in May. I'd really like to see a test of the 50-day moving average. That would also bring us down to the anchor from this gap right here next week. That would be nice to see. So, as long as we continue to see all these earnings reports, you can point at Amazon and say Amazon was a great response, but that's the exception to this earnings season. We've seen, even Apple, the golden child, got hit on earnings. Generac seemed like it wasn't an uptrend, but it still had a declining 200-day moving average over here. If you look at that, got hit hard. Qualcomm, the list goes on and on. Expedia, the number of stocks that have been hit. And this is why I don't buy stocks in front of earnings. PayPal, it doesn't matter whether it's considered a good company or a bad company. Rambus has been in a giant uptrend. That got hit hard on earnings this week. SDGR is another one. LYV, Live Nation. On and on, you can point to the list, the numbers of stocks that have been getting hit on earnings. The Russell 2000 is still kind of stalling out in the area where it's supposed to. We have been mentioning that this is the high end of the recent range where we've been hit a couple times. So what I'd still like to see, I think I mentioned last Friday, is something like this. Build a higher low and then some energy for a break that could be sustained. Right now, we got extended into this area, and we always ask ourselves the two questions of where has it come from? It just rallied from 170 to 200. Let's just call it 200. And where did it have the potential to go before it's likely to encounter a source of supply which might be strong enough to become resistance? Well, support broken tends to act as resistance, and we rallied up there quickly. It wasn't sustainable. Maybe it will be, but right now I think this is the more likely scenario in the weekly chart for the Russell 2000, and that will give us an opportunity perhaps in a couple weeks to get long the Russell 2000 in a low risk way. If, however, we get back above, let's just call it 196.5, and we stay above 196 next week, well then I'm flexible. That's, that's the beauty of being a swing trader. It seems as though the larger picture would support a pullback to create a higher low, but if it continues higher, well, I'm going to listen to the message of the market. I'm not stuck on some analysis, and that's what I do every single day for subscribers to Alpha Trends. And I wanted to point out this is the last weekend that you can save on the Alpha Trend subscription. It's really a good deal. Usually it's $999 a year for the subscription, which includes the end of day video update like this one, 5 days a week, and then a second video. It's generally about 10 minutes long with stock trade ideas lined up for you on multiple time frames, with the reasons for potential entries, the risk management, and that sort of thing. Each midday, I do another video update of those ideas, that we had mentioned the previous night, adjusting the stops, all that. Two courses. One's a 9-hour course, a 30-minute one-on-one with me. We'll do a one-on-one live webinar, you and me, and all of that for $7.99. So look at the link in YouTube below or on the website if you're looking there. Let's get back to the analysis. The semiconductors are, we spoke about, the potential of the 50-day moving average and this anchored VWAP being tested, and we've come very close to that. I don't view it as a magic support level that has to hold. I think that if it does this, gets trapped below a 20-day moving average, and then in about a week and a half, actually next week, right here, we're going to be getting rid of that data. This was 50 days ago, so we'll be getting rid of that data. That means the 50-day moving average will start to flatten out, and if we see it trapped below the 20, well then maybe that could pave the way for a deeper pullback in the semiconductors. They've been a huge winner this year, so why not, expect a little bit deeper pullback? It's possible. It's, just be careful if you have large accumulated gains in there. Don't be complacent. Complacency is how you lose your gains. XBI, the biotechs, I'll continue to say it, they just look awful to me. They're below the anchored VWAP from the low that it made this year. That means the average participant from that low is losing money. The average participant from everywhere this year is losing money because the anchored VWAP for the year is right here, that thick blue line. So this is just a losing index in terms of where people are positioned rather, and it begs to think that maybe we could go down, as I mentioned, to the 61.8% retracement, which would bring it down to that 80-ish level. So I would not be buying in here, not with a declining 20 and a declining 50-day moving average. It's just a recipe for losing your money. Once in a while it works and you get lucky, and then someone comes and points their finger and says, see, I bought there and you're so dumb. But the point is, I want a process that I can repeat, and truly risk management is my focus day in and day out for everything I do, which is what keeps me out of financials when they still have a declining 5-day moving average. And you could say, well, the 5-day moving average turned flat in there. It did, but look at how far it had come. It was extended. If I was looking to get long the financials, I would want to see it hold that 5-day moving average and then do this. That's the bullish scenario. But obviously that bullish scenario didn't pan out, so it's continued lower, and maybe next week it can right itself. I honestly don't care because I don't trade the financial stocks, and I also don't trade energy names, but they're still battling with this little battle of zone rather of prior resistance. If you're watching this on YouTube, I appreciate it if you give me a like and a subscribe. Other than that, just don't be in a hurry for next week. Wait for things to settle down. Let other people do the dirty business of buying the dip. If you're a trader, and I consider, everything I talk about, I consider as swing trade time frame. There's no reason to buy stocks. There's no reason to buy Google when it's below a declining 5-day moving average, and that goes true for Tesla. It goes true for Apple. It goes true for all of these stocks.